Thank you for taking time out of your busy schedules to attend today. I am Ken Tamagawa, CEO of SORACOM. Today, I will be explaining the financial results for the third quarter of the fiscal year ending March 2026. First, here is the executive summary. We achieved significant increases in both revenue and profit in the third quarter. As a result, we have revised upward our full-year forecast for the fiscal year ending March 2026. First, let's look at the cumulative results through the third quarter. Our recurring revenue, which is a key focus for us, reached 6.60 billion yen. This continues our trend of very strong growth, with a 38.2% increase year-on-year. If we look at the third quarter alone, that growth accelerated to 45.0%. Total revenue was 8.41 billion yen, an increase of 47.6% year-on-year. The global revenue ratio also remained at a high level of 41.8%. In terms of profit, both EBITDA and operating profit significantly improved. EBITDA reached 891 million yen, which is 3.5 times the previous year. Operating profit reached 645 million yen, which is 5.2 times the previous year. Profit margins were 10.6% for EBITDA and 7.7% for operating profit, demonstrating a steady improvement in profitability. Moving to the business highlights. Since both sales and profit progressed favorably in the third quarter, we have revised our full-year forecast upward. Furthermore, we are continuing to promote our transformation into an after-AI organization, following our initiatives in the second quarter. The ratio of SG&A expenses to total revenue improved by 10.9 points, dropping from 55.4% in the same period last year to 44.5%. Additionally, the total number of connections across the group surpassed 9 million in January 2026. We are very pleased that people and things all over the world are increasingly connecting through SORACOM. The structure of today's explanation will cover the financial results for Q3 FY 2026 and full-year forecast, followed by progress on growth strategy. First, I will explain the financial results for the third quarter. This slide shows the quarterly trends in recurring revenue and total revenue. The blue graph represents recurring revenue. This is stock revenue from IoT communication, AI, and the cloud. The grey graph represents flow revenue from sources such as IoT devices and software sales, which we call incremental revenue. We place importance on the blue recurring revenue. In the third quarter, this revenue increased by 45% year-on-year, accounting for a high ratio of 78.5% of total revenue. We achieved a significant increase in revenue due to the continued strength of our existing business, particularly our global business, and the effect of Misora Connect, which was consolidated in August. As for total revenue, in addition to the increase in recurring revenue, the front-loaded effect of synergies for KDDI fully materialized. This resulted in a substantial increase of 69% year-on-year. Next, I will explain the cumulative figures up to the third quarter compared to the previous fiscal year. As I just explained, recurring revenue increased by 38.2% year-on-year, and total revenue increased by 47.6%. Gross profit was 4.39 billion yen, an increase of 33.8% year-on-year. The gross margin was 52.2%, a decline of 5.4 points year-on-year. This is due to the relatively lower gross margin of the consolidated subsidiary, Misora Connect. We intend to improve Misora Connect's gross margin in the future. Specifically, we are implementing measures such as reducing infrastructure costs by utilizing SORACOM's cloud-native software mobile core. We are also reducing costs by centralizing procurement for both Misora Connect and SORACOM. SG&A expenses were 3.74 billion yen, an increase of 18.6% year-on-year. By fully utilizing generative AI to promote operational efficiency, we have succeeded in suppressing the growth of SG&A expenses relative to the growth in total revenue. As a result, the ratio of SG&A expenses to total revenue improved by 10.9 points year-on-year, reaching 44.5%. Consequently, EBITDA increased 3.5 times year-over-year to 891 million yen, and operating profit rose 5.2 times to 645 million yen. This represents a substantial increase in profit. Next, I will explain the upward revision of the full-year forecast. We have revised upward both revenue and profit forecasts from our initial projections. Since the initial forecast was disclosed as a range, I will use the midpoint for this explanation. Total revenue has been revised upward by 8% from the initial forecast to 12.2 billion yen. Operating profit is projected to increase by 23%, reaching 830 million yen. While there was a 900 million yen upside in total revenue, this naturally brought about an increase in the cost of goods sold and SG&A expenses. However, The net result was an upward revision of 155 million yen for operating profit as well. We are very pleased to have accumulated such solid performance. Next, I will explain the background of the forecast revision in detail. Let's look at this slide. As I mentioned earlier, total revenue is projected to reach 12.2 billion yen. This is an upside of 900 million yen compared to the midpoint of the initial forecast. There are three main factors here. First, regarding device deals. We initially estimated large device deals conservatively. However, we now anticipate the delivery of these large deals by the end of March. Second, KDDI synergies are progressing better than initially anticipated. Third, regarding Misora Connect, we conservatively estimated the risk of a delay in consolidation at the beginning of the fiscal year. However, since the consolidation started as planned in August, the current strong performance is now reflected in the forecast. Gross profit is up 230 million yen due to this increase in revenue. SG&A expenses were successfully controlled relative to sales growth, increasing by only 75 million yen from the initial forecast. As a result, EBITDA is 1.21 billion yen, an upside of 75 million yen. And operating profit is 830 million yen, an upside of 155 million yen. Next, we compare the latest full-year forecast with the previous year's actual results. First, we anticipate a significant increase in both recurring revenue and total revenue. Recurring revenue is expected to be up 38.7% year-on-year. Total revenue is expected to be up 35.7%. Consequently, gross profit is also expected to increase by 22.8% year-on-year. SG&A expenses are projected to increase by only 22.2% compared to last year. Crucially, the ratio of SG&A to total revenue is expected to improve to 43.9%. As a result, we forecast EBITDA to increase by 45.1% year-on-year, and operating profit to increase by 26.4%. The EBITDA margin improved by 0.6 percentage points, indicating that the profitability of our business is steadily strengthening. Next, we look at the KPIs for recurring revenue. Recurring revenue is calculated by multiplying the average revenue per account, or ARPA, by the number of paying accounts. In the third quarter, ARPA was 905,000 yen, an increase of 22% year-on-year. The number of paying accounts was 10,300, an increase of 14% year-on-year. ARPA is growing steadily. This is due to the continued significant global expansion in our existing business. Additionally, both ARPA and the number of paying accounts have substantially increased due to the consolidation of Misora Connect. As we have revised our full-year forecast, we have also reviewed the forecast for ARPA and paying accounts. ARPA has been revised upward by 4,000 yen compared to the midpoint of the initial forecast. The number of paying accounts has been revised upward by 100 accounts. Overall, the KPIs for recurring revenue are progressing steadily. Finally, let's look at our organizational efficiency. On the cost side, the suppression of SG&A expenses due to the transition to the After AI organization continues to yield results. SORACOM has been fully utilizing generative AI company-wide since the end of 2022. This fiscal year, we have set forth the transformation into the After AI organization to accelerate our initiatives. Specifically, we are prioritizing human resources for only truly essential areas. By fully utilizing generative AI, we are building a system that enhances productivity in existing businesses with fewer people. We are then reallocating the human resources generated through this labor-saving approach to growth investment areas. This allows us to scale the business while minimizing new hiring. The graph in the middle shows SG&A expenses. Although the absolute amount has increased due to the consolidation of Carriot and Misora Connect, the ratio of SG&A expenses to total revenue has significantly improved, from 55.4% to 44.5%. As you can see from the employee graph on the right, although headcount has increased due to M&A, we have been able to achieve growth without engaging in significant new hiring. That concludes the explanation of the third quarter financial results and the full year forecast. Next, I will talk about the progress of our growth strategy. Regarding the growth strategy, we are moving forward with stable growth in recurring revenue, coupled with three key drivers. A. Global expansion. B. Promotion of strategic alliances and M&A. And C. Initiatives for generative AI and IoT. Furthermore, we believe that the power of generative AI will apply not only to point C, but across the entire strategy. This accelerates the speed of growth, including the foundation of recurring revenue, global expansion, and strategic alliances. We call this overall concept the real-world AI superconnector strategy, which combines IoT and AI. Before explaining the details, I will report on the status of group connections. The total number of connections across our group surpassed 9 million in January 2026. The number of connections is a crucial driver supporting our sales growth. This is because an increase in connections directly leads to the expansion of recurring revenue, which is our stock-based revenue. Currently, we are growing at a pace of over 1 million connections per year. We are very pleased that so many customers are choosing SORACOM and actively utilizing it in their IoT deployments. Next, let's look at the progress of the growth strategy one by one, starting with global expansion. A feature of SORACOM is that our platform complies with global standards for both communication and the cloud, allowing it to be used worldwide. We currently operate with a three-base structure. We have offices in the United States and the United Kingdom, in addition to Japan, with local teams selling directly to local customers. Global revenue for the third quarter reached 3.51 billion yen. The ratio of global sales to total revenue was 41.8%. Our global evaluation continues to rise. This time, SORACOM's service was selected as a cool IoT product by CRN, a specialized media outlet covering the global IT and IoT sectors. The selected product is Connectivity Hypervisor. This is SORACOM's proprietary multi-profile management technology. It enables flexible control and switching between multiple communication carriers on a single eSIM. For globally deployed products such as automobiles, it allows the optimal connectivity profile to be added or switched depending on the destination country or region. As a result, global deployment can be easily achieved with just a single SORACOM SIM. In fact, it is already compliant with the SGP32 standard, which addresses the rigorous requirements of the automotive industry. Among our three global bases, the US is showing particularly remarkable growth. The graph on the left shows the trend in US business sales. The cumulative year-over-year growth for the third quarter is 84%. You can see that we are achieving high growth in a short period. As a Japanese startup, we are extremely pleased to be growing rapidly in the American market, which is the largest market for our product. Since the US market is immense, more than 5 times the size of the Japanese market, we will continue to focus on expanding global recognition and gaining share. Here, I would like to introduce one customer case study in the US. UAS Sentry is utilizing SORACOM in their service for monitoring infrastructure facilities, such as power plants, using drones. The US is a vast country. It is difficult for a single communication carrier to cover the entire territory. SORACOM, however, supports multiple carriers. This allows customers to secure stable communication regardless of the location, just by deploying a single SORACOM SIM. Based on this high availability and redundancy, adoption in the social infrastructure and industrial sectors is steadily increasing in the US. Next, I will explain the second pillar of our growth strategy, strategic alliances. We are working on strategic alliances in multiple areas, and one of the most important is connected cars. In this field, we are collaborating with our investors, KDDI and Suzuki, to support the global expansion of the Japanese automotive industry. A recent example is the adoption of SORACOM by Honda for their mobility robot Uni-1. Uni-1 is a seated mobility robot. It allows users to move as if walking just by shifting their weight while seated, leaving both hands free. In operating such mobility devices, it is crucial to flexibly manage communication according to location and usage. SORACOM was adopted due to the flexible operability provided by our connection management console and APIs, not to mention the high availability and scalability enabled by our multi-carrier support. The second strategic alliance is our collaboration with KDDI. We are promoting this in multiple areas. This includes the connected car field I just mentioned, OEM provision of a cloud-native mobile core system, and combining generative AI with IoT. Last year, KDDI synergy revenue was concentrated in the fourth quarter. This year, we have pushed for early execution within the comprehensive agreement framework. As a result, cumulative KDDI synergy revenue for the third quarter reached 935 million yen, a 140% increase year on year, and we anticipate increased revenue for the full year as well. Since the comprehensive agreement will continue in the next fiscal year and beyond, we will further advance our collaboration. The third growth strategy is the real-world AI superconnector strategy. This strategy promotes our evolution into a superconnector that connects everything in the real world, both physical and digital, to AI to create a better future. By physical, we refer to IoT data acquired from devices, such as automobiles, home appliances, and various other things. By digital, we refer to internal company data, such as sales, production, and HR data. By connecting all of this data to AI, we believe we can create significant value for our customers. In short, SORACOM will assist in connecting everything to AI. To realize this vision, we will continue to actively develop new AI and IoT services. Physical AI is gaining attention, and SORACOM is precisely the foundational service for this era. SORACOM provides end-to-end foundational services. This includes global communication, cloud and AI services, and devices. These are the essential elemental technologies for realizing physical AI. Furthermore, ours is already an AI-enabled platform. We already offer services such as multimodal analysis that utilizes AI for images and videos. We also offer services utilizing generative AI bots, and our customer base is growing. Moreover, the SORACOM platform itself is evolving to be available for use by agentic AI. Since this is a business model that can continue to build value leveraging AI, we will continuously evolve this service in line with technological advancements and customer demands. Among our AI and IoT services, the combination of SORACAM and SORACOM Flux is attracting particular attention. SORACAM is a cloud-based camera service that starts cloud recording immediately upon connecting to Wi-Fi. By using SORACOM Flux, images and videos acquired from SORACAM can be analyzed with AI, and necessary actions can be automated. Last year, we demonstrated a use case where SORACAM and AI automatically detected when a worker collapsed in a warehouse. This has since been implemented in a real-world case with Otsuka Warehouse. We are also seeing a growing number of use cases across various industries, including retail and construction sites. As our latest case study, I would like to introduce a new example from a manufacturing site. At Toyo Seikan, they have built a system on SORACOM Flux that automatically detects inspection items based on images captured by SORACAM. Specifically, this applies to inspection processes conducted when switching product types on the manufacturing line. As shown in the photo, this has enabled the automation of visual checks that were previously performed manually, thereby reducing operational workload. We are also seeing strong interest in our new service, Wisora, which enables anyone to easily create a generative AI bot. The name Wisora is derived from a combination of wisdom and SORACOM. With Wisora, users can train a generative AI simply by registering a URL or file. They can then easily deploy the bot to a website or internal platforms such as Slack or Microsoft Teams. This makes it possible to automate responses to repetitive inquiries. The company Chikaku is already using Wisora in interesting ways. Chikaku provides a monitoring service that allows users to check occupancy status and make video calls by connecting to a TV. By introducing Wisora, they built a system where generative AI instantly provides automatic answers to FAQs on their official line account. This enables customers to smoothly self-resolve issues while reducing the labor required for human support. Chikaku rated Wisora highly for its ease of use, as it allows anyone to create and operate a chatbot without specialized AI knowledge. So far, I have discussed the growth opportunities driven by the combination of IoT and AI under Pillar C. Going forward, we will continue to focus on developing new AI and IoT services, aiming to create an environment where more customers can easily leverage technology. Up to this point, I have explained our strategies for sales growth. Finally, I will explain profitable growth, which is an index we emphasize. Profitable growth is calculated by adding the recurring revenue growth rate and the EBITDA margin. We have set the goal of maintaining this metric at a level of 40% or higher. In the third quarter, profitable growth reached 48.8%. This exceeded our target level. The breakdown consists of approximately 39% recurring revenue growth and an EBITDA margin of about 10%. For the full year forecast, we expect profitable growth to reach 48.6%. This significantly surpasses our management target of 40%. We will continue to balance growth and investment, aiming for both sales growth and profit growth, and to promote our business to achieve sustainable corporate value enhancement. Finally, here is the summary for today. First, our third quarter performance achieved significant increases in both revenue and profit, following the strong results in the second quarter. As explained earlier, profitable growth also reached 48.8%. Based on this solid progress, we have revised upward our full-year earnings forecast. We now expect revenue of 12.2 billion yen and operating profit of 830 million yen. Second, recurring revenue continues to grow strongly, up 45% year-on-year. The global revenue ratio exceeded 40%, with the United States in particular driving growth at a year-over-year rate of 84%. Third, synergies with KDDI and connected car projects are steadily progressing. In addition, the integration of Misora Connect is advancing smoothly. Finally, we have strongly promoted the transformation into an after-AI organization. This resulted in an improvement of more than 10 percentage points in the SG&A expense ratio. At the same time, we are advancing our real-world AI platform initiatives, and multiple concrete use cases have already emerged. SORACOM will continue to strive for the realization of its vision as a global platform originating from Japan. We appreciate your continued support. That concludes my explanation. Thank you for your attention.